Well, good afternoon, good morning, TM, Osho, Najam. Good to see you. Oh, morning. Good to see you, Josh. Hey, Ryan. So, okay, folks. Yeah. All right, let's get stuck into the session. Okay, so as we always do, what we're doing, we're trying to look at the macro fundamentals, the daily sentiment to try to find technically savvy areas of entry. Okay, so we're going to start by just recapping some of yesterday's trade ideas, and then we'll get into the sentiment for today. So first of all, let's look at the euro dollar. Now the euro dollar, I've removed that entry. It was around the 40 zone. It was around here, 40. Tried to go long, and I got taken out a couple of times trying to go to the upside. Ultimately, that was a good pivot area, and we've rejected that. In hindsight, little learning lesson is I I knew that the FOMC minutes were likely to be more hawkish, and so I was expecting some dollar strength. So in hindsight, that euro dollar long didn't really make sense. What I was doing is I was getting seduced by the technicals with this lovely hammer reversal bar, long body, closed within the previous day, and I was just trying to I was getting seduced by that. Now, it doesn't mean to say that can't work out still nicely. And actually, this is a nice area for future upside, but for yesterday, you know, it was the wrong trade. But that's still a nice area for the future. So don't forget that area. But that euro dollar long didn't work out. However, right, I think this dollar strength is quite stretched. We'll come into this in a bit later, but basically FOMC minutes were showing that the Federal Reserve were not so worried about the labor market anymore. And as long as inflation is making correct progress, then they should be able to cut interest rates. So on net should be dollar should allow dollar weakness to return. So should I get back down to that 775 region? Okay, that's suitable for buying down here. Just this kind of false break of this level could try up to three times, just a 5 point stop here. Absolutely fine. That would make sense in line with some of that dollar weakness. Also, obviously a clean break of that level here would also be very nice for euro dollar longs. Right, so there are a couple of levels that really stand out. So just note those. But from yesterday, the euro dollar long just didn't work out. The Aussie New Zealand dollar trade, what we were looking for based on the RBNZ, remember, 100 and 200 exponential moving average and a 50 exponential moving average round. The RBNZ, the markets are expecting the RBNZ to give a more sort of hawkish tilt to their inflation expectations and interest rate levels. They didn't, right? And so that allowed the New Zealand dollar to weaken. And we were looking for a retracement back down to that 751 region with a 9 point stop. In the end, what you got was a nice sort of flag pattern. Do you see? That's what I didn't take this, right? But it's one that would have been valuable for taking. And did anyone get Aussie New Zealand dollar long? Let me know. Yeah, no worries, TM. But that's the kind of thing to be looking for, okay? You got this with a flag pattern. You've got the move higher, almost vertical. Oh, nice one, Mornay. Hey, good man. That's what we like to hear, right? Excellent. Good work, Mornay. Right. Um, the way you can play these kind of trades is look for a flag pattern when you're having that impulsive breakout. So here you can see, look, impulsive move, that's the height of the flag. Your ultimate target would be the height of the flagpole, okay? And what you're looking for is the break of this. Now, the further this tilts back, the better. So you want it going back almost, if it's sort of almost 45 degrees down, that's perfect. And then you can use an on-balance volume as a proxy for volume in the FX markets. Obviously, we don't use volume because we haven't got volume. This is Owanda. Who knows what Owanda's volume is relative to the world doesn't help us. So what you're looking for is a break above the channel high, right? And then just going with it. Now you can use the hot zone principle here. Yeah, it's the entry is there. Like the way to have done it is the swing point here, and then have like, because it's a bit of a wider spread, you've got to have a wider stop. So maybe like an 8 point stop here. And you could try up to 3 times, something like that. That would be the way to do it. Or if you just want to take the pressure off yourself, you enter and your stop's the other side of the flag pattern. But you can see even in that instance, let's say you got in here, got in relatively late, you want to have your stop the other side of the flag pattern. You can see you could easily get a 2 to 1, right? So the flag patterns are forgiving, but there's also the hot zone potential. So that Aussie New Zealand dollar one was fine. As I said, I was looking for this pullback to the 75, right, for the best opportunity. Didn't get it, and I wasn't around to follow the flag pattern, although it could have done. I just noticed that kind of setup. But remember, what was underlying it was the underpinning philosophy that the RBNZ was, disappointed markets. So that's what gave us that New Zealand dollar downside. In practice, you probably would have taken it off or moved to break even before the Australian employment data that came out last night, right? So upside was limited, really. Or you could have just moved to break even and see what you got. Okay, so that was the Aussie New Zealand dollar pair. Yeah, what else we were looking at? We were looking at euro pound, weren't we? Now this one I did get. I added to this nicely. So that was a nice move. We had the move here on the weak employment data out of the UK. We had the inflation data, which was a bit of a disappointment. It wasn't possibly as weak as markets were expecting, but we knew it didn't change the big picture. We can see the yield spread between German bunds and UK gilt still pushing up, right? So swing trade perspective was still there. You can see we're broken out of this channel. We're trying to grind higher. You've now got a inside bar pin bar with this region here just really looking attractive as a breakout trade, right? So looking for this, right? 800 doesn't look too unreasonable. I've got an 800 target. See if I can get up there. Great. But the nice thing about this is just the, such a small stop. Did anyone get the euro pound long? And that was happening during the market session, during our session yesterday. So that's nice. So you don't want to lose money on that now, right? And that is up, what is it up? 4 to 1, roughly. So locking it in break even, right? So just leave it. We'll leave the risk reward alive, but essentially I'm not going to lose money on that now because you're 22 points up. So you can take 5% off, 50% off, something like that. I'm holding this, the whole position, because I really like it. I've got I've sort of changed my swing trade to that hot zone entry, essentially, is what I've done. And I'm looking for this to keep moving higher. The thing to look at is here. You see you had this pin bar, inside bar. Do you see the way that price broke above there? We're essentially looking for a retracement to the nose of that hammer reversal. That's what made us so confident on the hot zone entry. Was basically return to that nose. You'll see this over and over again, right? You know, markets move down, return to the nose, sell off, right? See, markets move down, return to the nose, sell off, right? Markets sell off, return to the nose. Yeah, nice. So technically, this was just a really sensible place for us to enter. And it just gave us that. Look, now, Euro pound swing trade is still absolutely eligible as well. So that's Euro pound. So we're keeping that, but just bear in mind that should be at break even. You don't lose money on the euro pound now. That's my take. Gold. Now, gold and oil are getting my attention for today. Basically, on that headline that Najam pointed out yesterday, that was gaining traction throughout the session. So it's a great shout from Najam that US President Trump is closer to war with Iran than people are thinking. And if you just look at the oil market says, yeah, we'll say amen to that, as it were, in futures markets, right? So a 4% gain in oil. The markets are sensing something coming big. Okay, so what I'm looking at here is potential long, right? Try up to 3 times on oil on this 65.92 entry. Right, so try up to 3 times long, 65.92. you could just be taken in with a spike. That's what I'm looking for with this. And similarly with gold, gold was being bid, and again, it's safe haven demand that causes gold to bid. So here, 50, right? 50 is the entry I'm looking for here on gold. So 50-50, I've expected to be taking it maybe a little bit under 50, 50.47. I think on probably an $8 stop. Right, try up to 3 times with gold. Okay. And what you're looking for here is to be taking in with momentum on a headline. And there's weekend risk with this with oil and gold because there's a chance US President Trump may attack Iran over the weekend, which I would say would make sense because it's going to be very disruptive for markets. Have the news squawk on, and if suddenly there's some news of US President Trump going ahead with an attack on Iran or another confirmation of it or a further extended rumor of it, then look for immediate upside in gold. Okay, so it'd be a gold buy immediately. But then what you got to watch out for is the immediate reversal. Now, when you're trading the squawk, right, I'll just give you a little few tips here. Squawk trading is very difficult. Now, I've worked as a professional analyst for a number of different places, right? And when you hear this squawk talking out, what they're reading mainly from a Reuters news feed. So before you hear it, it's come out on a text news feed. So that means you'll often see, and you would have noticed this, the squawk comes out, but the market's moved before. And that's often because you've got algorithmic trading programs connected up to that news squawk. And so I know things like, Trump, war, Iran, buy gold. It'll be obviously more sophisticated than that, but you get the idea. That means we have to be clever. And there's two things to note. So first of all, the text comes out first. If the text is significant, you can go with the move. But, and this is the tricky bit, you'll often get the denial of the headline and everything reverses. You'll see it over and over again. Axios reports US President Trump is closer to war than everyone thought. Oil goes up 4%. And then US President Trump will say, President Trump denies going to war and says, Iran are my great friends. We can't wait to do business together. And then it all goes all the way back down. So just be aware of that dynamic. So in other words, if I saw this and something, it's sad to be talking about something as war and making money out of it. That's sad in a sense, but it's part of our role as an analyst and our role as a trader is to trade the ebbs and flows of financial markets for a variety of reasons. But we just acknowledge the sadness. But say the war with Iran takes place, then it's buy gold immediately, and any leverage you've used, you want to deleverage as quickly as you can to take the profit. Okay. Don't just hold it for like day. Obviously, if it's really significant, then you hold gold. If it's like, US President Trump is heading to war and he's going to be speaking to Congress about, a protracted, affair, and increasing, government spending on, if it's full on war, then obviously you would buy and hold gold for a couple of days, right? But just keep that in mind. Okay. The other trade we were looking at was the Dow yesterday. Now, this sort of with that false break of an inside bar, we had the break to the upside and we had the initial move up to 732, right? Tracement, stop out. Yeah, good. Good. I'm glad you got that. Yeah, this is where it came in nicely at the 79.30 at the New York Open. Great work, TM. I was looking at that yesterday with Najam saying that was a lovely little thing. And Najam was looking at the FTSE 100 trade as well that we pointed out from a few days ago. I'll just go over that. Yeah, so we got that nice run up, right? And what you would have done if you'd got that and you got up to those highs, you would have taken something off and left it at break even. So just be aware that that should not have turned into a losing trade for you, okay? But also just be aware that that breakout level, do you see how significant it was? Breakout, tried to hold, failed. Breakout, support, right? Failed, failed, failed. Just know that these kinds of areas are turning points, and that's really what we're trying to find is that turning point in the market, okay? And the FTSE 100, again, that very nice trade was this outlook here when we're looking at that swing point back on Monday, right? Do you see? And Najam said, "Oh, what do you think of the FTSE 100?" And I said, okay, it's a breakout trade for me. Again, I didn't take this one, but just pointing out, and you can see here, look, in once, stopped twice, in at the third time. Right. And you can see that's just run up 10,700. So that's the FTSE 100. So let's go and have a look at today. We've already looked at the gold outlook and the euro dollar outlook and oil outlook, but let's just go through what we're looking at. So first of all, okay, there's that Lagarde stepping down news that's been doing the rounds, hasn't helped the euro at all, but the euro is mainly a dollar story. And we're looking here at the 630. All right, return to tech strength. Got the FOMC meeting, broad agreement to hold rates, but views diversion path. And basically, what the views are, if inflation starts coming down, rate cuts a green light. Employment data is less important, although there were two members that still wanted to cut, and one was Walsh, right? Not Walsh. One was oh, hang on, who was it? Waller, I think. Yeah, Waller. Mirren and Waller were happy to cut on labour market risks, but everyone else was happy that labour market was doing better, right? The US economy is generally doing well, but they're waiting to clear evidence that inflation is firmly returning to target. So it's an inflation focus. That's what the minutes tell us. We saw some dollar strength, which is what we were expecting coming in. That's one of the reasons why Trump is close to making a decision on the issue of going to war with Iran, right? That's coming in to headlines. So look for oil upside, gold upside on any further confirmation of that. If it's a repeat of this headline, it's not tradable. It needs to be something that's extra, something that's confirming it, something from Trump's own lips. That's the sort of thing that would send gold surging. Trump's delivering remarks on the economy at 4 o'clock Eastern Standard Time, 9 o'clock GMT. So watch out for anything on Iran coming out there at 9. And then we've got continuing jobless claims. So what we're looking for there is any strength in the labour market is broadly supportive for the dollar. Any surprising weakness in the labour market could weaken the dollar. So just be aware of that. Not expecting much from this because jobs data is less of a focus now. It's inflation data, so that puts the focus on the PCE print tomorrow. Got earnings from Walmart, Deere, Wayfair. Let's see. Got the Antipodeans. We've got the positive risk out with the Aussie US dollar on the labour data. We'll look at that in a minute. Right. Okay, so what does that mean? So for today, just looking at the Aussie data, inflation's been hot for Australia. This is mixed. So the participation rate is down, which is Aussie negative. Employment is slightly below consensus, but still building, but offset by the prior, which revised up. So that's
on the
flat.
referencing piece in the New York Times reportedly, the US is said to be considering a bilateral trade deal with Canada and Mexico.
Okay. Unemployment rate, that's in line with the previous low. Unemployment is very low in Australia. That remains the place. So on balance, full-time employment still building. Yes, employment's positive, mainly full-time employment numbers, unemployment low. So on balance, it's supportive. Right? So that does keep that Aussie New Zealand dollar buy bias alive. Jobless data shouldn't move the markets much, but if it comes in above or below minimum expectations, that could move the dollar. Weak jobs market should be dollar negative. Strong jobs market remains dollar positive. So that's what's the outlook for that. Aside from that, Kashkari speaking at 2. PMIs coming out from Australia and Japanese inflation data coming out. So just be careful of the yen overnight. Oh, there's one little thing with the yen. Just let me see if I can find it. With the yen, we're starting to grind our way back higher here with the yen. Yeah. Let's just check what TPO I've got here. Yeah. I want to find somewhere technically savvy here.
And elsewhere, another piece in the New York Times, this time in relation to Uber, when the name is moving to enact stricter background checks for its drivers, according to the outlet.
Just trying to see if there's anywhere really decent. Dollar yen weakness continues to make sense, right? Just notice that return to that hammer reversal there. Do you see? Sell off, return to the nose, and then sell off. That's now a bearish engulfing bar on the weekly chart. So it's still trying to move lower. Just trying to see if there's anywhere technically to get in here. That's time price opportunity on the weekly chart. So just notice we're rejecting the value area high from this week. What I'd say is a nice area for you. And if you can just if you could have some software, right, that just holds this in place, if we got a retracement to that value area low, right?
And just as part of that New York Times piece on a bilateral trade deals, it's just worth
That'd be
highlighting
suitable for shorting with like
it would instead be a joint renewal of the
just a
US
10-point
FTA.
stop trying to get into that larger move, which is a retracement to that value area low.
To be clear.
So there was some news out last night that the US took a spot check on the dollar yen in January. So in other words, they hated dollar yen being up at this level, right? Up at these highs. On the 23rd of January, they did it. Right. And you see the way the market moved lower on that day? So in other words, there's some very savvy traders and investors who know that because the US took this spot
Just
check,
in terms of the specific
an unusual event,
piece, it does
and
point out that
the step before intervention, look at the way that the market reacted. So this tells you that there's a huge sell bias in the dollar yen, and look for selling anywhere between 157 and 160. Right?
Outside
You can see here, bearish engulfing bar, sell, bearish engulfing bar, sell. Look for those kinds of scenarios. The one thing I'd say at the moment, okay, a 10-point stop at that level, which is the value area low on the TPO from 2 weeks ago. That's the only other trade idea. Okay. All right, folks. I'll bid you adieu. I'll see some of you later in the futures room. Well done, TM, on catching that down move in the futures market. Good work. Yeah. Catch you later, Ryan. Najam. See you guys. Bye for now.